Welcome. My name is Thomas Ledford, back here with another video concerning the income tax training course. This is a video for sessions 4 through 6, the hands-on part of the curriculum, which you get emailed with documentation and content that's going to allow you to fill these scenarios out by hand, step by step. And so by the time you finish this course, you should be able to prepare individual income taxes by hand with confidence if you went through the information and you read the publications and you studied and you've got all I can give you when learning and understanding all the different forms and publications and the requirements that's associated with the basic income tax preparation course that was given. You should do very well, especially with my support and assistance with going forward and making a career out of income tax preparation. So in this module, it covers sessions 4 through 6. This is a hands-on portion of the course where you will take this information and you will get the necessary forms needed to fill out for each scenario, to prepare the scenario. And when you finish, you should have a finished scenario for each lesson given inside this form when it comes to the content that's on this page that you receive by email. So getting started, Betty Collins has a 1099-R, which is retirement income, and a 1099-G, which is unemployment. And 2 kids will receive, and 2 kids, will she receive any earned income tax credit on the tax return? The question, well, the answer is no, because Betty Collins has 2 different types of income, but unfortunately they both are considered unearned income. And so when it comes to unearned income, you don't receive earned income tax credit on those type of incomes. So for retirement income and unemployment, she will not get a income tax credit calculated on the tax return once you do this particular tax return for this client. So remember that in the future, all unearned income, when it comes to create a tax return for it, and which has children on it, you don't get to calculate any earned income tax credit because unearned income doesn't produce earned income tax credit. The next one is Richard Boston has 2 properties that are 3 flat buildings, 6 units each, and 2 kids and a 1099-R, and a deceased wife for 2018. Can he claim her on his upcoming tax returns? Yes, he can, and he will. And he also has retirement income, which he probably drew down from maybe his 401k he had from a previous job, or maybe the survivor benefits that he's getting from her. So that's how that works when it comes to this type of situation. So in the email, you'll get everything you need to fill out a tax return by hand for all the particular scenarios on this page. And when you finish this course, you should have a good understanding of how to prepare basic individual income taxes, why you fill out each form that's associated with each scenario inside the course, and everything else to go along with the basic income tax preparation training that this course gives you. Is what you should have in the end that's going to allow you to go out here and make money for yourself, or decide to go work for a company. The choice is yours. My course is designed for you to upgrade to the next level and take my career preparation training course, or if you're a good fit for me and the company and what we believe in, our partnership career program. So those are the 2 courses that's available after this one, the partnership career program and the career income tax preparation training program. And those are for people who want to definitely make a career out of this industry and make real life-changing income for themselves and their family. And so for more information about that, just reach out to me and I can send you some information over through email about that. So the next scenario is Melvin and Tina Buford, which are a married couple, has 2 kids, and both have unemployment, 299G, and a 3-flat 6-unit building. They rent for income of $750 a unit. Tina is a teacher with $239 in educating expense. Can she claim those expenses? Explain. Yes, she can if they're itemizing on a tax return. She's eligible to do so. And also, they have unemployment. They both have unemployment coming that you will get via email. And they have a building, which is a 3-flat with 6 units at $750 per unit. And so you'll get detailed instructions on this scenario through email on how to go forward and calculate and preparing this return without having to guess on your own what information to use. And so that's basically how this will work throughout the whole course. You'll receive emails for each individual scenario that you're going to have to fill out by hand. That's going to allow you to do that without you having to guess what information goes where, and so that's how this course is designed. So the next one is Geraldine Flowers. I give her birthday. She receives Social Security in the amount of $67,821 and a Form 1098E interest income of $8,981. So in this particular scenario, the reason I mentioned the 1098E, which is interest income, student loan interest, is because a lot of times the software that I use doesn't calculate all the different types of forms that's needed. So in that situation, I have to give you the amounts inside the scenario that you can plug in once you get to the form section and start going through preparing the individual tax returns for each scenario. So that's why it's showing you like that, because Social Security benefits, the form you would normally get in the mail, my software doesn't calculate that, doesn't produce a form like that I can email over to you so you can use as a reference point. So in that situation where I don't have reference documentation that I can send over, I have to give you the actual amounts inside of the scenario that you can plug in once you start to prepare the individual income tax returns for each one of the clients. And so the next one is Timothy Riley has a Form 3903 moving expense. He also has interest deduction and unemployment, and he's relocating to start a new job. What are the 2 requirements of taking the deduction? By this point, you should have the answers to those written down from the previous lessons that you can just go back to and take the answer off a previous lesson and just fill in which you're going to answer yes to, and at the same time fill out the forms by hand to create a tax return for this particular scenario. And so the next one is Peter and Jenny Glover has 2 kids and both work together inside their business as they are self-employed health insurance. They work together inside their business and they have self-employment health insurance and other income for which they were given a 1099-C. And Peter is making alimony payments of $25,550. So when it comes to getting the forms needed to fill out this particular scenario, Peter is able to write off the $25,050 that he paid his former wife in alimony on the adjusted gross section of the 1040. And the 1099-C, you'll receive an email with information on the particular information on how to apply that to the 1099-C that you're going to be filling out by hand when it comes to that. So everything you need for each scenario that's not covered inside the scenario that you're reading, you'll receive an email with additional information that's going to help you to clearly they will prepare the returns by hand for all these scenarios on this page, and you'll have additional videos that you can refer to that's going to even go through some particular scenarios by hand and filling them out for you, where you can use as a reference to be able to fill out these type of forms in the future on your own as you get comfortable and confident in what you're doing when it comes to learning how to prepare individual income taxes for yourself. Okay, so the next one is William James receives Social Security in the amount of, and he has also 1099-C, which is cancellation of debt. That's what that 1099-C stands for, cancellation of debt. Many times when you see that form from a client that you sit with, it comes because either A, they had a car and they lost it, or they had a house and they lost it. And they are getting this information from the institution that they had the item with, because they basically relieve them of their obligation, but at the same time they're reporting it to the IRS. So it's considered income to them, which goes on the tax return on line 21, which is not a good thing in your case, especially if you already got considerable income already. The 1099-C cancellation of that doesn't help you when it comes to your tax return situation. And so that actually goes against you and not for you when it comes to receiving a 1099 cancellation of debt form in the mail. The next one is Billy and Cindy Milkshake has form 3903, which is moving expenses. They relocate for a new job for Billy, and they have 3 kids, and also a 1098 interest deduction in the amount of $654. And so again, this information that you're going through, you should have already answered the questions to it in the question and answer section. And so when it comes to this part of the training, this is the part where you actually get the 1040, the AEIC form, the 8812 form, the 2441 form, the Schedule E form, the Schedule C, self-profit and loss form, all the different forms that's going to allow you to prepare an individual income tax return are used for this section of the tax course going forward. And so in sessions 1 through 3, we had the Q&A, and then the next part was session 1 through 3, hands-on. When you see the hands-on title, that means this information is for you to prepare returns with the forms that you're going to have access to, that you're going to print out from the comfort of your home, and prepare the returns when you feel like doing them based on your time frame or your time restraints when it comes to getting this information done for you, and what your overall agenda is when it comes to learning this skill is what that's going to be all about. The next one is Frank Dillon has rental income, 6 flat units each, and self-employed health insurance premium of $597. He's collect a total of $850 per unit. So his units are worth $850 a piece. So you're gonna do the math on how many units times $850. That health insurance premium he has to pay because he works for himself strictly only, and he's responsible for that. So that's what his premium is going to be, so he can have health insurance for himself and his family, and that's what he pays every month. And so there's certain forms that's going to be associated with his return that you're going to have to print offline and be able to fill out by hand to get the results that's associated with his particular return. And so you want to have videos that's going to clearly help you to figure out what those forms are and how to fill them out going forward when it comes to having access to all the different video tutorials that's designed to help you to be able to successfully learn how to prepare individual income taxes and being confident in what you're doing and learning to the point where, like I say, you can use the skill set for yourself and then upgrade it to a course that I offer that allows you to make significant income, because it's based on you being your own boss, or you being in part of the partnership program where you get to work with me and leverage my training, my software, my everything that's going to allow you to prepare individual income taxes for people that you go out here and solicit to, that's going to do business with you. And in the process, under the partnership program, we split the fee down the middle. So if you charging $450 for self-employed people like I do, then we split that down the middle, because you're using my software, you're using all the things you need to actually run a business, but you didn't pay for those things up front. And so that's why the partnership program is all about splitting the income that you produce down the middle, because you're not investing in anything up front. all on the back end, and you get to learn and utilize my resources and my training and everything I already got in place and established for you to learn from. Is how the partnership program works. The next thing will be Sharon Donut, has 2 kids, receives the unemployment interest deduction in the amount of $12.58. Will Miss Donut receive earned income tax credit? And if you remember what I said in a previous video, all earned income doesn't receive earned income tax credit. So unemployment doesn't receive earned income tax credit. Retirement income doesn't receive earned income tax credit. Alimony doesn't receive earned income tax credit. And so those are a few of the incomes that, if that's the only thing they have going on and they have children involved, then they won't receive any income tax credit for those type of tax returns. And so in this content here, in this page here, 4 through 6, the hands-on part of it, you will receive emails for all these different scenarios that I went through with specific information that's going to allow you to fill out all these different clients by hand. And you will also have videos that's going to help you to do this whenever you feel like taking the time to set aside some time to prepare these individual income taxes by hand with this information that you have access to online 24/7 for 12 months. That's how this program works. And so I will see you in the next video.